The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, so take a look at the market action on Thursday. Let's focus in on the livestock side. Cattle futures under some pressure ahead of a cattle on feed report that's going to be out Friday afternoon. Watching some of that cash trade and really just watching this cattle market as a whole here as of late. Wondering if we're getting to a point where we need to be a little more concerned, more volatility, etc. Let's talk about it. Joining us now, Brady Huck with Advanced Trading and ATI Pro Media. Brady, good to catch up with you again, my friend. Are you staying warm in Kansas?
I'm trying my best. I'm ready for the weekend and the heat wave, something to change.
Absolutely. Absolutely. Well, and you mentioned to me too, you're just kind of getting going with calving season. So some warmer temperatures, I'm sure, would be very welcome and beneficial for you for the next few weeks, right?
Yep. Anybody out there, cow-calf country, that's calving right now, heart goes out to you. It's a battle every day, keeping them all alive. But it's you wonder what you're doing sometimes when all the stars align and you hit a week like this when you're hit the heart of your calving window. But we'll roll with the punches. We're a resilient bunch.
Absolutely. Well, hey, talk to me about this cattle market. Futures, I know we've been pulling back a little bit here and there over the last couple of weeks. We've had some tough down days. We've rallied. We've had some down days again. It just kind of feels like choppy volatility in both fats and feeders right now. I mean, how would you classify what we're watching right now in cattle futures?
Yeah, good. It's definitely a pullback here. I think we've lost the euphoric type trade in feeders and fat cattle. The choice cutout's been rolling over, been under pressure. Slaughter pace has slowed down. Feels like the feed yards lost a little bit of leverage, and it's trickled throughout the whole. Managed money just adjusting positions and lightening their load on that front. But the cutouts down 12 consecutive days, week to week. When we look at consecutive days, week to week declines, we've seen that 12 days in a row, and it's looking like it's going to continue that here for at least today and maybe another day. The chuck and the round are key primals of the cutout. They worked their way into the lean market, and the chuck and the round have slid lately. The cutout's definitely leading things lower. And then you look over at the pork sector, and that's not doing us any favors as well on that front. But definitely a balancing act for packers as they manage product availability and the buying on the Fed side of things. But definitely a pullback here, Jesse.
Well, I want to talk about the Packers and some of the cash market trade in a second. How about that feeder fat spread? Is that something that you've been keeping an eye on? I mean, how is that doing right now?
Yeah, I think you can go a number of different ways with that, but I think the feeder cattle complex definitely providing some incentive out there and looking a little more shiny, especially when you look at deferred months out there. On everything. But the feeder cattle side of things, definitely some opportunities out there for producers. And we can debate where your hedges need to be if you're going to retain ownership throughout the whole life cycle of that animal. I've lent more towards the feeder cattle side of things as we progress, but I don't know. Personal preference there.
Okay. Yeah, you kind of talked about feedlots losing some leverage. It looks like Packers a little bit weaker bids here this week. Still kind of trying to get some more cash activity, but it seems we're kind of around that 200 mark live, 315 dressed. I mean, in terms of the cash markets and what's going on the ground, I mean, is there any difference there? Are we seeing a pullback there as well, in your opinion? I mean, what's going on the cash side?
Yeah, I think when you want to talk about cash markets, we got to pay attention to the basis difference. Feeder cattle, when I look at feeder cattle, I look at 278 on the index and 266 on the board, and we've pulled back significantly on the feeder cattle index here, maybe in anticipation that we're going to have a big wheat run here as we pull cattle off a wheat pasture and bring those cattle to town and change some ownership there. We're gonna the farmer's going to let go of some of those cattle, and the feed yard's going to buy them and place them. It's just how aggressive do they want to get with placing that and owning those feeder cattle as they come off wheat pasture. It's nice, when you're making money is with pins going out, that sure helps you bid up on the stuff you're replacing that with as they come back in. But a little uncertainty going forward on the cattle side of things. And as a producer, you got some great opportunities out there still. Despite the pullback, we're still, very much in the upper end of record type prices. And we don't want this $5, $10 slide to turn into a $30, $40, $50 slide. There's a lot of questions out there on the economy, Jesse. Inflation 2.0, that could be the crazy event that could spur this round to send beef and these feeder cattle, fat cattle prices to all new highs and extend this bull rally. But if, the economy falters, jobless claims, those types of things come in, we could see things turn the other way and this thing start to fade back on us where we don't want it to go.
You bring up a great point, and that's why I think it's important to emphasize risk management here, whether it's cattle or hogs or all commodities, is because you look at the overall economic health. There's all this talk about the Doge payments, baby, and all the moves we're seeing in the macros, and just there's so much news headline risk and noise out there, it feels like, and the topic of inflation not going away. And you look at the grocery store, everyone's concerned about high prices, et cetera. Just with so much volatility on the periphery of the ag markets, I think it just comes back to good risk management, right, Brady?
Yeah, you got to go out as a cow-calf guy's got to protect these prices at the end of the day. And then if you're buying these expensive feeders and putting them on feed, you got to protect your risk there and defend the bottom line. You don't want to lose $200-$300 on these animals when you place them. A lot of equity on the line there. The price of chicken, the price of eggs, those are all underlying factors there that are maybe supporting, guys going out and buying ground beef and cooking with beef, which is supportive short term, but how long will that last going forward? A lot of questions, more questions than answers as we go. The Doge payments, you just got to chuckle at the headline. Some of them seem like we live in this made up fantasy world, and it's like, where do we live anymore? What's going on out there? But I don't know. $5,000 payments to every American out there, that would definitely loosen up the purse strings, and we get into that YOLO moment where we can cook out and have a Super Bowl party every weekend, Jesse.
It's very true, and it's hard to say what's going to happen with that whole situation. It changes by the hour, it seems. Brady, I want to ask you about the grains too a little bit. You're in HRW country there in Kansas, and I know there's been some talk of winter kill, but we know wheat's got 9, 10, 12 lives. So, I mean, your thoughts on some of the pullback in the wheat here on Thursday? I have to just think that the market's kind of just ebbing and flowing with the weather right now.
Yeah. Well, first, as a producer, you have to respect the rally that we've seen since the first of the year. Wheat markets put on a really nice premium, almost $1 rally on new crop wheat, KC wheat out there. So good to see that. Have had a pullback. So still, big picture, grand scheme of things, not a bad spot to go lay off some risk and manage your price risk going forward if you're in the wheat business as a producer. But yeah, definitely, we're getting into that weather season where there's headlines of, frost concerns, drought concerns, too much, too wet here, too dry there. It's just going to get noisier as we proceed forward here in the U.S. and in the Black Sea, Ukraine. Watch what's going on over there. Significant portion of Ukraine and Russian wheat has been drier than normal over the last couple months. So pay attention to developing weather over there. Decrease in Black Sea wheat productions, potentially the hope that we will gain some export business on the U.S. front if they have production problems there. But yeah wheat's had a great rally, and you got to respect that rally. But I go back to last year. We talked on our live show this morning. We talked about wheat specifically, and in April and May, we put $1.70 on this wheat market in a month, Jesse. And the next 90 days, we gave back $2.50 of that price. So dynamic, volatile. Don't underestimate the potential for these markets to move, Jesse.
Any notes for quartered soybeans? I know soy was the star on Thursday, and corn. You got March struggling with $5 again on the board. Any notes for you over in the row crops?
You rewind the clock again back to just looking at hindsight a year ago. February was a terrible sentiment month in 24. We had sold off brutally going into March options expiration, and we kind of have a vice versa tale of two cities here this year. $5 on the board has seen a nice rally since harvest. What are you doing with it? What are you doing with it? We don't want to look back at the woulda, coulda, shouldas. Safrinha corn crop, U.S. corn crop, there's a lot of production dominoes that are going to play out over the coming months, and that may be all she wrote here in a couple months, or maybe the story continues and you got a good market.
Good thoughts. Anything final you'd share or reiterate with folks here today, Brady?
No, as we go into it's headline season, and there's going to be plenty of headlines. It's also meeting season. There's lots of magic pills out there from a marketing perspective, but you get what you pay for a lot of times, and there's no easy button when it comes to marketing your grain and livestock. Be disciplined, manage risk, but that doesn't mean you have to give up opportunity. Don't give up opportunity in the name of risk management. But nothing wrong with establishing floors. Stay grounded here.
I know folks can watch you guys on the Advanced Trading ATI Pro Media YouTube channel live at 9 every weekday. Brady Huck with Advanced Trading. Always good to catch up with you, sir. Thanks for joining us today.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.